When most people think about billionaire investments, they imagine artificial intelligence, luxury real estate, private jets, or cutting-edge technology companies. But behind the scenes, something much quieter has been happening. Some of America's wealthiest investors have been steadily purchasing farmland. At first glance, that decision seems almost boring. Why would someone worth billions choose acres of cornfields instead of the next big tech company? The answer lies in how the wealthy think about money. Billionaires don't just chase high returns, they focus on preserving wealth across generations. They know that trends come and go, but assets that produce something essential tend to remain valuable. Farmland isn't just empty land, it's a productive asset that grows food, generates rental income, and often increases in value over time. Unlike a stock that can lose half its value in a market crash, farmland continues producing crops regardless of what's happening on Wall Street. It also has one advantage that almost no other investment has. You simply can't manufacture more of it. Every year, more farmland is converted into housing developments, warehouses, and commercial buildings, making productive agricultural land increasingly scarce. While headlines focus on the newest investment craze, many wealthy investors quietly continue buying farmland because they understand a simple truth. Owning assets that produce essential goods is one of the safest ways to build and preserve wealth over the long term. For them, farmland isn't just another investment, it's a strategic insurance policy against an uncertain future. To understand why farmland has become so attractive, we first need to understand inflation. Inflation simply means that the purchasing power of your money declines over time. Think about how much groceries, rent, or fuel cost just 10 years ago compared to today. The same amount of money buys less because prices have increased. That's a major problem for investors who hold large amounts of cash. Billionaires know that cash sitting in a bank account slowly loses value if inflation remains high. That's why they prefer owning real assets, things with intrinsic value that can rise in price along with inflation. Farmland fits that description perfectly. As food prices increase, the crops produced on farmland often become more valuable. At the same time, the land itself may appreciate because productive farmland becomes more desirable. This creates two potential sources of value: income from agricultural production and long-term appreciation of the land. Unlike speculative investments that depend mainly on market sentiment, farmland is tied to something people need every single day: food. Whether the economy is booming or struggling, people still need breakfast, lunch, and dinner. That consistent demand makes farmland more resilient during periods of economic uncertainty. This doesn't mean farmland is risk-free, but it does explain why many investors view it as a powerful hedge against inflation. Instead of hoping inflation slows down, they own assets that have historically benefited when prices rise.
Now, let's look at the biggest economic force driving farmland values: supply and demand. The world's population continues to grow, and every new person needs food. But while the number of people keeps increasing, the amount of high-quality farmland isn't expanding. In fact, in many areas, it's shrinking. Cities continue spreading outward, replacing farms with neighborhoods, shopping centers, factories, and highways. Climate challenges such as droughts, floods, and soil degradation can also reduce the amount of highly productive agricultural land. That means we're facing a simple economic reality: growing demand for food and limited land available to produce it. Whenever demand rises while supply remains limited, prices often increase over time. Billionaires understand this principle extremely well. They're not just buying farmland based on today's food demand, they're thinking decades into the future. They recognize that owning productive land could become even more valuable if global food demand continues rising. It's similar to owning beachfront property before a city becomes popular. Once everyone realizes its value, prices have already moved higher. The same logic applies to farmland. The best agricultural land is limited, difficult to replace, and increasingly important in feeding a growing global population. That's why many investors see farmland not just as a short-term opportunity, but as a scarce resource with long-term strategic value. It's not only billionaires who are investing in farmland. Large pension funds, insurance companies, university endowments, and professional investment firms have also added farmland to their portfolios. Why? Because institutional investors think differently than individual traders. They're not trying to double their money next month. Their goal is to generate steady returns over decades while reducing overall risk. Farmland helps achieve that balance because it has historically behaved differently from stocks and bonds. When financial markets experience volatility, productive land may be less affected because its value depends more on agricultural production than investor emotions. Many farmland owners also earn income by leasing their land to farmers, creating cash flow while waiting for long-term appreciation. This combination of income and potential growth makes farmland attractive to institutions managing billions of dollars. Diversification is another major reason. Experienced investors rarely place all their wealth into one asset class. Instead, they spread investments across different sectors to reduce risk. Farmland adds diversification because its performance often isn't perfectly tied to the stock market. During uncertain economic periods, having exposure to productive real assets can strengthen an investment portfolio. That's why many professional investors view farmland as an important piece of a balanced long-term investment strategy, rather than simply another agricultural business.
Technology is changing agriculture in ways that many people never imagined. Modern farms are no longer operated using only tractors and manual labor. Today, satellites monitor crop health from space. Drones inspect fields in minutes. GPS-guided machinery plants seeds with incredible precision. And artificial intelligence helps farmers decide exactly when to irrigate, fertilize, and harvest. These innovations increase productivity while reducing costs, making high-quality farmland even more valuable. Investors recognize that the future of agriculture is becoming smarter, more efficient, and more profitable. Climate change also plays a major role in this equation. As extreme weather affects some regions, productive farmland with reliable water access becomes increasingly scarce. Scarcity naturally drives value higher. Billionaires understand that owning premium farmland isn't just a bet on today's farming industry, it's a bet on the future of food production. As technology continues improving yields and global demand continues rising, productive farmland may become even.
Of course, no investment is perfect, and farmland is no exception. Weather disasters, droughts, floods, changing commodity prices, government regulations, and rising operating costs can all affect returns. Land is also relatively illiquid compared to stocks, meaning it can take time to buy or sell at the desired price. These risks are exactly why experienced investors don't buy farmland based on headlines or emotion. They conduct detailed research, evaluate soil quality, water availability, regional demand, local regulations, and long-term economic trends before investing. This is one of the biggest lessons ordinary investors can learn from billionaires. Successful investing isn't about chasing whatever is popular this month. It's about understanding the risks just as carefully as the opportunities. The wealthiest investors rarely make decisions because of excitement. Instead, they focus on probability, patience, and long-term value creation. That disciplined mindset often matters more than the investment itself. Whether they're buying farmland, businesses, or stocks, they ask one simple question: will this asset still be valuable 10 or 20 years from now?
So, does this mean everyone should rush out and buy farmland? Not necessarily. Purchasing farmland directly requires significant capital, specialized knowledge, and ongoing management. Fortunately, modern investors have more options than ever before. Some choose farmland real estate investment trusts, commonly known as REITs, which allow investors to gain exposure to agricultural land without owning or managing a farm themselves. Others invest in agricultural exchange-traded funds, farming equipment manufacturers, fertilizer companies, seed technology businesses, or food supply chain companies. These alternatives provide indirect exposure to the agricultural sector while requiring far less capital. The important lesson isn't that farmland is the only good investment. The lesson is understanding why sophisticated investors allocate part of their wealth to productive assets that generate long-term value. Every investor has different financial goals, risk tolerance, and time horizons. Farmland may be suitable for some portfolios and completely inappropriate for others. The smartest approach is to understand the underlying economic logic before making any financial decision.
When you look at history, a clear pattern begins to emerge. Every generation experiences new technologies, financial trends, and investment crazes that capture public attention. Yet beneath all of those changes, certain fundamentals remain remarkably consistent. People need food, they need water, they need energy. Assets connected to these basic human necessities often retain their importance regardless of economic cycles. Billionaires understand this principle better than most. They don't ignore innovation. In fact, many of them invest heavily in technology. But they also recognize the importance of owning productive real-world assets that provide long-term resilience. Farmland represents one of those assets. It combines scarcity, utility, and income potential in a way few investments can. Whether or not farmland becomes the best performing asset over the next decade is impossible to predict with certainty, but its role in feeding a growing global population is unlikely to disappear. That's why many wealthy investors continue allocating capital to it even when the media is focused elsewhere. Ultimately, the story of billionaires buying American farmland isn't really about agriculture. It's about the way successful investors think. While most people chase fast-moving trends, they quietly accumulate assets that solve real-world problems and generate value year after year. They focus on scarcity, long-term demand, and productive ownership rather than short-term speculation. American farmland happens to fit many of those characteristics, which explains why it has attracted attention from some of the world's largest investors. But the greatest lesson isn't that you should immediately buy farmland. The real lesson is to start asking better questions whenever you see the world's smartest investors making unusual decisions. Instead of following headlines, try understanding the economic forces behind those choices. That mindset alone can transform.
As we've seen, billionaires aren't buying American farmland because it's exciting. They're buying it because they believe it's a valuable long-term asset. With a growing global population, limited productive land, and the constant demand for food, farmland represents something that has remained important throughout history. While it may not be the right investment for everyone, understanding why the world's wealthiest investors are paying attention can help you think differently about building long-term wealth. Sometimes, the biggest opportunities are hidden in the places most people overlook. If you enjoyed this video and want more data-driven finance and investing content that explains what smart money is doing, make sure to subscribe to the channel and turn on the notification bell so you never miss our next video. Thanks for watching, and I'll see you in the next one.